Good morning, everybody, or good evening. Hi, Alan. Hi, Veronica.
Hi,
We've got
Chris.
a lot to go
Hi.
to. Hi, yeah, we've got a lot to go through today. I know Alan was reading a lot about Japan. We had um, some changes in the Japanese leadership, so we want to talk about that. We want to talk about some presentations that we did last week, some property information we came up with, and of course, cover the markets. We got a lot going on in the market.
So I brought up the survey that was done this summer by Knight Frank. You can see it on the screen right now. And it's a survey of wealthy clients by Knight Frank around the world. And it shows that 25% of them are planning to buy a second home. And 9% of them intend to change their country of residence in the near future. And those that plan to change the country, the most popular destinations for them are buying home and relocating to UK, 30%, Spain, 17%, France. And you can see that those countries represent good quality of life, and especially nowadays, people looking for good healthcare system, of course, political stability, reliable currency, and good education system. But 2/3 of all the buyers of real estate buyers right now are confident they will not return to work even after the quarantine. So, and buyers that are surveyed by Knight Frank also expect property prices to fall over the next 12 months. And the company itself, Knight Frank, predicts that it will happen in 16 cities out of 20 they monitoring. With that in mind, they also expect that in 2021, the prices will go up again. But for the buyers, for the high net worth individuals that we're seeing who are buying right now, number one criteria that they're looking for is, of course, upgrading their family main residence. And the other most important criteria is healthcare, is improved access to quality healthcare. And even we live in close to Santa Barbara, and we see how many buyers from Los Angeles coming to our area and just buying everything here. I just want to show what to expect next in the real estate market and 5 trends that Knight Frank pointed out that we need to monitor. Number one is the change in tax landscape, especially the government's changing the regulation for real estate market. The education system in different states and different countries are different in response to quarantine, to pandemics. Then Airbnb market is different. As I also mentioned, blurred lines between primary and secondary homes. Debt will be cheap, especially for high net worth individuals, and we notice that in most countries it's even negative rates. In certain countries are negative rates, but nowadays it's going to be harder to come by. Also, digitalization will spark more visa and work incentives, and we're already seeing, like Barbados has launched a 12-month welcome visa to encourage remote workers to base themselves in the Caribbean. And
That sounds like a good place to go. I mean,
yeah,
we should all
Well,
move to Barbados.
the only other place that has it has just unveiled a digital nomad visa is Estonia. So much as I like Estonia or Barbados,
yeah, especially the countries who need to boost their economies, or the states that the rural states that they need to boost their economies. They already offering some incentives, like Georgia, in Savannah, Georgia, they're paying workers to relocate from other states to their rural area. So they're paying relocation fees. So that's that's what we're seeing worldwide, not only United States, but right now we'll see everywhere, including visa and immigration incentives.
Portugal in particular has a golden visa for retirees.
Right.
Italy has started to do that also for remote workers. that they can work in certain parts of Italy and have very good tax incentives. I can't remember, we can talk about that another time because I don't have the details. But these kind of, I mean, it's not like obscure country. I mean, Estonia and Barbados are obscure, but I mean,
but they are.
Yeah, well, but mainstream European countries are really thinking about how to attract people.
Mm-hmm.
Yeah, absolutely. And some countries are losing tourists, but they can attract wealthy tax residents this way. So they incentivize.
I think one of the things that we don't know yet is this a temporary move or is it a more permanent move? I think that's another discussion for another day. Was one article I was reading this week that basically executives are extremely selfish because they're not being able to mentor physically, being in the same office and the same contact, up and coming staff. So there's going to be a huge skills gap, almost, or not necessarily a skills, but a practical skills gap between the guys at the top who are then like, well, we're out the office, we're going off to Marbella to live, and the people that are actually in the office of middle level and lower level won't be able to learn those skills because if they were in the same office, and it's not actually taught, it's just watching what other people are doing. And if the offices are not as busy as they were before, that's being lost. It was an interesting thought.
Well, this is a side note, but we just talked about this morning that Google is offering $49 courses with a certificate that you completed a course from Google and a grade. And they're like, this could decimate normal education. This could decimate the whole idea that you have to have training from somebody or you've been apprenticed. You can learn it online on a $49 course. And can you imagine? I mean, IT people are already like, I took all these certification courses. I'm certified to do this. Here's my stuff. I mean, if they can move that from the IT to another sector of the economy or to different areas, really, I mean, these universities in the United States, which are big money makers, are going to be under pressure. Really, it's just going to change how things are done. I can see that happening in 10, 15 years easily. All kids in the United States, I mean, well, not all kids, but there's a lot of kids in the United States that are being homeschooled right now. Whether you want to call it, they're at home being schooled. So they're used to being online. They don't care. Their high school experience is completely different than my high school experience. They can't even relate to it. They're like, oh, there's no such thing as hooky. There's no such thing as skipping classes anymore. They just say, do I have to be online? I can watch it on my own time even. They're like, why would I show up to class at 8 in the morning? I can watch it at 10 when I wake up. Boom. And the teacher's like, fine, yeah, watch the recording. If you have any questions, call me. I mean, it's a completely different attitude. So yeah, this is a great topic for later on. The whole COVID.
Kind of scary a little bit. I mean,
it's scary because we're old, Alan.
Yeah, maybe. But I also think you lose something.
Of course you do.
Humans are social animals at the end of the day. We need to interact with other humans, or we don't know how to interact. We have to learn to interact with other humans.
It's how we interact that's changing. My kid's on all day long on Discord, on things I don't even know exist.
The hell is Discord?
Talking to people. Exactly. talking to people. Ron knows I had to download Discord and figure out how to use it so that I could interact with my own kid. There's a learning curve here, man. It's not like, oh, you're going to go talk to your kid.
You're just Chris, you could be making that up. I have no idea.
I'm not, dude. Just what's amazing. It's like, we're talking about Facebook and Twitter. The people don't even think about these things anymore. It's like, oh my God. Anyways, it's a whole tangent. So, okay, thanks, Ron. That was amazing. Alan, you want to go back in history and talk about Japan a little bit?
Yeah, and it won't be interesting, and it won't be. We won't do this very often. I promise to any viewers. Please don't switch off.
Alan's getting scholarly.
Chris on the markets. Chris on the markets is going to be really interesting in about 10 minutes. You can go make a coffee and come back.
Okay.
So one of my pet topics, my pet likes is Japan, Japanese business, Japanese economy, and Shinzo Abe, who was the longest serving Japanese prime minister for God knows how long, because they used to have Japanese prime ministers a bit like Italy, as often as people change their socks. So he was prime minister twice, but laterally for almost 8 years, 2012 to the current time, and he's just decided to step back from prime ministership. And he gave his name to Abenomics, which was the name given to his methods of stimulating the Japanese economy, which had gone stagnated for 20 years, since the early 90s, basically, for a number of reasons. And basically, he called there's three arrows that he said that he would implement to revitalize the Japanese economy: monetary injections, fiscal stimulus, and structural reforms. The first two of those, monetary injections and fiscal stimulus, they did that. The structural reforms, he didn't really, or it's an unfinished business, let's call it that. He did some structural reforms, which we'll go on to, but not as fully as he intended to do at outset. Results, Chris, if you go to the other graph, that's the Nikkei, but we'll come back to the Nikkei at the end. So basically, his idea around, if you look at 2010, 2012, when he took over, his idea was to basically stimulate the nominal GDP of Japan. It was 495 trillion yen when he took over in 2012. His aim was to get it to 600 trillion as soon as possible. In 2019, it was around 560 trillion. That's a 2% per annum increase from 2012, which was actually the worst of the G7. Amazing. So he completely failed at that. No stimulation of nominal GDP. He also failed to stimulate real wages. So real wages actually fell as well. So he wasn't very successful at doing that either. And what he was successful, if employment hit an all-time high in Japan. And that's mainly because he was successful, on purpose or not, of getting women into the workplace. So women coming back into the workplace, and a lot of old age pensioners coming back to work as well. And that basically meant that there was a lot more people employed. So whether we attribute that benefit to Abenomics, I don't know. The problem is, we'll come on to at the end, is that there's the fertility rate is appalling. Yeah, number of births and deaths in Japan, as you can see here. Even in the 1960s and in the 70s, there was not enough births to sustain the population. I mean, you basically need 2 births per couple to sustain the population. Otherwise, you're decreasing, especially in Japan. Again, we'll come on to it. There's almost no immigration. It's a very homogeneous country, generally speaking. The birth rates for Japan has been really bad since post Second World War, because the emphasis on the work ethic basically means that there was great studies done on this, that Japanese men in particular are too tired to have sex when they come home. So there was no kids.
I'm not sure we're going to keep that in the recorded version.
Well, that's up to you. But it's an important part. It's an important part.
No,
let's
repeat that for emphasis, Alan.
So they didn't procreate enough, basically, and
that's how we lose all Japanese clients.
Yeah. Well, both of them.
And if Russians don't figure things out soon, they're also going to be in the same trajectory.
That's the problem. The problem is, most Western countries are very similar birth rate. And the death rate. The problem is, or the difference is, we've had immigration more. Certainly in America, for sure.
Yeah.
Western Europe, yes. Debatable, because there's big arguments about that right now, especially there's a much more east-west split on that. That's why immigration happens right now, to kind of keep up that. So I want to spool forward to kind of lessons. We don't really have that many graphs on it, so I'll keep it quick, and you can put the Nikkei graph up again.
Well, I want to talk about this, Alan, first, right? You said
sure. Yeah, he basically took he lowered the reliance on Japanese government bond issuance. You can see there's from 2000 kind of 10, 12, whatever, it's slowly coming down, and then obviously it rises in the last year or so.
He was good at lowering debt. So.
Yeah, he did. I mean, they basically the yen strengthened under his watch, and tax rates came down. I mean, I was going to say that stimulus does not cause problems with public debt; it solves them. So basically, if you slash tax rates and stimulate the economy, you actually then raise generally more money to pay for public services. And that's actually what happened there. That's why he was less reliant on JGBs, because he didn't need to do that, because other parts of the economy were raising more money through personal income taxes, because people's wages were rising. But they still raised more money from corporate profits, He did quite a number of things. He broke so structural reforms. He broke the agricultural lobby, for example, which again was beneficial for bringing more money into the Japanese government. I mean, if you break down monopolies and you give more competition, as long as it's taxed correctly, you actually create tax revenues. Structural reform. I mentioned he was partially successful. He built links with China, which was a taboo subject for a long time because China and Japan don't really get on, especially since the Second World War. And his monetary policy worked. And you can see these results. 2012, he took over. There you can see where Chris's cursor is. That's where some of the tax reductions happened, corporate tax reductions, which stimulated the Japanese government, Japanese stocks and Japanese companies. Profits rose, and it's been a pretty successful time. According to
a lot of that was forecasting the events that would occur, and so a lot of those the gains in the stock market happened in the first 2 years of his kind of tendency, right?
Right.
So
It was a bit of a sell, buying the rumor, selling the fact.
Yeah, and the thing is, the stock market is a forecaster for the future. So basically, people are saying things are going to get better in Japan, and that's what you saw, this huge rise, this basically doubling in the stock market happened in his first 2 years of the thing. Whereas now,
I mean, the main reason I wanted to bring this up is what lessons does it have for specifically Europe? Because a lot of people are talking about the Japanization of Europe. And what they mean by that is stagnant economy, no growth, no growth of the labor market, and perennially zero interest rates, basically.
And real wages are falling.
Right.
I mean, even with the stimulation packages of these huge government bailouts and everything like this, there's no way to increase the stimulus, and there's no structural changes happening in the labor force. So you don't have women to put back to work. You don't have an increase, like you said, of the Turkish workers in Germany anymore. You have nothing to stimulate this. So, okay, the EU's purpose was to decrease the problems with cross-border trade, and that was supposed to stimulate the economy. So that was the whole purpose of basically the EU. The EU has instead created problems of political problems. It's created problems with immigration. So maybe there was a boost originally because of this, and it would be nice to look at some of these stock market charts on the EU. But right now, there's a stagnation in Europe, and your point is really valid, is how Europe is supposed to grow with all the structural problems it does have. And the benefits kind of this cross-border trade are long in history.
One of the reasons that the Western European countries, the richer countries, let's say, were very keen to have Eastern Europe integrated was as a source of cheap labor. I think it's had mixed success. A number of things that they can learn from economics is stimulate the economy by either slashing tax rates, which, in France and Germany and Scandinavia would be, pretty shocking. And also focus on investing in public infrastructure projects and increasing the educated workforce and immigration. That's basically what the lessons are. And we're going to talk about, I think, the NASDAQ, which is basically a lesson in the new economy, new productivity, which is going to, influence all our lives. And that's why it's been a success, is that people are already viewing that as the new economy.
I want to bring up, go back to Japan 1 second, because it's in the news this morning. We talked about the call option activity that we saw, and let me try to bring this up on the Telegram, our Telegram channel, real quick. We talked about these huge, almost weekly expirations. So the options would expire in 7 days or 14 days or something like that from the time that they were bought, and they were buying millions of dollars, millions and millions of dollars of Spotify, Tesla, Apple, Adobe, Salesforce, Netflix. At first, even mentioned last week that they could probably be identified as some large institutional investors actually taking their stock trades off and putting on, lower cost, finite risk trades in options. Well, it came out this morning that was actually one whale, SoftBank, and basically putting a lot of money into these short-term call options. So all that's come undone in the last 2 days. The real damage was in NDX here. So if you look at this weekly chart, and you can see, like, this was this week, you get a nasty candle like this that we haven't seen. A lot of people say, oh, you haven't seen that since June. Well, that candle is a lot bigger than that candle or that candle. This is back here in March when we had the COVID scare. So this is a very, very scary, reversal from very high levels. It's down like 1,000 points from where it was at the beginning of this, or it's high during this week. So the NASDAQ is down quite a bit. It was, you can say it was down 10% in 2 days. And a lot of that can be attributed not to the small kind of companies that no one follows, but the big companies like Apple. Apple was at 137 during the week, and that's now down 117. That's a $20 price move on a $130 stock. It's quite a big move here. So a lot of this unwinding is happening in Amazon, and you can see that these last two days have been pretty miserable for Amazon, for Microsoft, and and these are the bellwethers. These are what was leading the market. So this is where you start to think to yourself, okay, now the trend is going to change, or it has changed. We don't just go straight up anymore. Can the market make a rebound? Can the market go up and make new highs really relatively soon? Is there any chance that this is like just still a bullish market? And the answer is really yes. We're still in a bull trend. And usually, unless there's completely pure speculation in the markets, usually markets don't just go straight up and come straight down. They go straight up, okay? But when they go down, they have like a rounding top. So there's a V bottom and a rounding top. And what we need to see is some kind of, probably next week, there'll be some, the question is, when does the Fed step in? I mean, the minute the Fed says, okay, we've got this, we're going to do something about this, then the market feels that the Powell puts in place again and things can recuperate. Mm-hmm. However, technically, you have some pretty serious sell signals arising here. And so these sell signals don't occur that often. But we've had a couple in August already that were stopped out. And again, because the market's been so far above its 200-day moving average, its 50-day moving average, the NDX, like we showed last week, is so far above the SPX that these things need to come down and at least consolidate for a few weeks here. That is potentially the best case scenario for what we are seeing right now, the beginning of just a consolidation period. However, a 2-day move on a NASDAQ of 10% is not usually what you see in consolidation periods. So, when you see massive moves like this is a lot of people liquidating, and you have to be really conscientious of where we are in terms of our put call ratios, the complacency we've seen in the buying of the call options and no hedging. And we've talked about that in our Telegram channel. I kind of feel bad that, maybe I wasn't adamant enough. We haven't talked about this enough, guys, that like when the markets are going up, it's not the time to be buying and doubling up and tripling up your positions. It's the time to be unloading. Well, you just lost 2 weeks of the market in 2 days. Following on from that, you can be very certain that investors are shocked here. One of the things I wanted to show was this, again, this increased call buying. You can go to the Telegram channel. It's on the Telegram channel.
Okay.
The issue is this blue line is way up here. It's never been way up here in the last 20 years. Now, okay, option markets are more available and accessible to individual investors. So the market has changed in the last 20 years. But still, this level of call, this is call buying. This is the number of calls on open buys versus minus the puts, relative value of calls over puts. This is giant amounts of call buying, and call buying is only bullish, and there's been no put buying. And this has led to what we've seen in the past, where recently this low put call ratio. So in other words, nobody's hedging, complete complacency. So to say that we get a 10% move in the market and that's a good sell-off and you can get bullish now, markets are still super bullish and in complacent state. And it's going to take a lot more time to wash this out. We need to be careful here. If there are rallies on this thing, we should be selling. The question I wanted just to look at is everybody goes, well, let's get gold. 2 weeks now I've been saying there's nothing in gold to be happy about. There's nothing here to be excited about.
It's also down the last 2 days.
Right now, there's a lot of uncertainty. There's a lot of unloading in the markets, and it doesn't have anything to do with economic rationale. It's just that the markets were completely overbought for so long coming into the summer, regardless of economic activity, regardless of the government stimulus packages, regardless of everything. People were just buying everything in equities, U.S. equities, especially those large caps. So until we unload on that and we get some clarity about the new presidency and where things are going to go in terms of inflation and interest rates, I don't think gold is a good hedge for anybody. We'll leave it at that. I'm going to post some blogs over the weekend about the market update. We can expect September to be rocky. We mentioned that last week. Our blog is on our website. And I think that's enough for tonight. Okay?